Welcome to the weekly wrap up. We are ending the week with interest rates slightly higher than where we started. I know I'm a broken record. February has not been kind to us in regards to interest rates. In the month of February, we have literally moved 5/8 to 0.75% higher. And we are now with interest rates that we have not seen since November 29th of 2023. Okay, so it's been a while since we've been here. Why did this move? Fed minutes came out this week, and you would think that those minutes are just regurgitating kind of their January meeting. Oh no. They take into account new reports that came out, and so that's why they can move the market, because we just had a little bit hotter CPI number. We just had a little bit hotter producer price index number. So again, they're now talking about that in their Fed minutes that came out this week. They have said, we're optimistic, but we're in no rush to cut interest rates. We want to make sure we're not doing it too soon. And again, we've seen this before. During COVID or right after COVID, the Fed kept interest rates too low for too long. It's why all of a sudden interest rates went zing so quickly, because they found themselves behind the 8 ball. And I don't know if they're going to do it again, but it could be possible that they're waiting and waiting and waiting, and it would maybe force them to cut quickly, which would cause interest rates to go down quickly. I much preferred a little bit measured pace rather than the quick up and the quick down. It stresses everyone out. But I was never in the camp that they were going to cut in March. I was always thinking May, June, July-ish. And that seems like it's still very likely, but cautious. Two other things that I want you guys to know about. Number one, if you are doing condos, if you're listing them, if your buyers are looking at them, one thing that you guys have to know is the homeowner or the association insurance is getting to be a nip of a challenge. So what that means is if the association's insurance deductible is more than 5%, it is no longer eligible for Fannie Mae or Freddie Mac. Now, one caveat to that. Fannie Mae does have a list of approved condos. And if your condo is on this list, then you can exceed the 5% deductible rule. But if it is not, you are subject to it. And the challenge with these is insurance has gotten so expensive over the last couple of years. Associations are trying to look for ways to cut costs for the association to stay well maintained. And unfortunately, the way they do that is raising their deductible. But unfortunately, that's not what Fannie and Freddie want right now. So be really careful when you're looking at those condos and make sure that you are asking for the insurance information sooner rather than later if you are looking at those condos. Last thing I want to tell you is we are starting to keep track of kind of what our clients are seeing and kind of our own little survey of what the market's doing with our clients. So last week we had 8 clients making offers. Out of those clients, 4 of them got the properties, 4 of them lost, and 5 of them were in multiples. And the range of multiples was anywhere from 300 all the way up to 1.3 million. And the 1.3 was in multiples. So again, I think that information is interesting. Hopefully you find it interesting too. And again, it's just a very small subset of what our clients are feeling. If there's anything else that you guys want to see from us or that we can offer you, please don't hesitate to reach out. It is what we're here for.